Yes.
It has been suggested that only banks providing services to businesses will be affected by these new reporting requirements. Is that an accurate assessment of who would be required to file information reports?
Madam Chairwoman, we don't actually believe that it would just fall on banks. And in fact, in First Data's role to accept, when a merchant wants to accept a credit or debit card, a bank must actually sponsor the merchant into the system. That's what Visa and MasterCard at least require for their particular cards. And First Data is then usually a party to that contract. So in our role as a service provider to a bank, we would assume that the bank would ask First Data, because we were actually part of the processing arrangement, to actually report the information. So no, we feel like it would fall on banks, processors, merchant acquirers.
Thank you. Mr. McCracken and Ms. Darian, Ms. Tupna suggested self-reporting electronic payments as an alternative to bank reporting. Could you comment on that proposal?
One of the less burdensome recommendations that we have made is that we think that there are very easy things that can be done with the current tax forms to help facilitate reporting. One of the things we recommended was modifying actually the Form 1040 Schedule C, which is the form that sole proprietors use, which is what the IRS seems to think are the segment of the population that are underreporting, where in Part 1 of the form we could simply separate the line item for gross receipts and sales into two and ask them to distinguish between cash payments and also credit and debit card transactions. It's an easy way to self-report, and it's also an easy way to remind the business that they have to track their cash payments equally as well as their electronic transactions. So yes, we agree that that would be a great way to begin the process of increasing compliance.
It's not something we've specifically dealt with yet, but I would agree that it would be a better alternative than what we have on the table now. I'm not in a position to endorse it yet, but it is something that I think bears some looking at.
Okay. Mr. McCracken, many businesses, particularly small businesses, make agreements to sell their card payment income to other entities, often with franchise or securitization agreements. Do the proposed reporting requirements account for this type of arrangement where the merchant never receives the full value of their card payment income? Can you comment on that?
I'm probably not the best person up here to comment on that, but it does strike me that that would be a significant problem I think that's exactly, though it gets at the heart of, I think, the whole issue is you can't begin to catalog all of the situations where the money that moves through the credit card processing system is not reflective of real income.
Any other member of the panel would like to comment on that?
I think I can
Yes,
specifically
Mr.
address that, where the merchant effectively sells their receivables, and they instruct me rather to credit their daily receipts to the entity that has fronted them the money, and that would present tremendous difficulties of determining who's responsible for the tax burden.
Thank you. Ms. Dobna, when this new reporting requirement was first proposed for 2007, it was estimated that it could generate approximately $225 million over 10 years. Only 1 year later, that figure jumped to $10.8 billion over 10 years. What accounts for this large discrepancy in those estimates?
Actually, we asked the same question. We've posed that question to Treasury in the meetings that we had with them, and nobody ever really actually gave us an answer as to what accounted for the jump. And I mean, it has been obviously significant. One of the things that Treasury said was that the large number accounted for all of the different tax gap proposals together, and it wasn't just the credit card reporting one. So I'm sorry I don't have a better answer, but we'd love to know as well.
One in the panel have any comment?
Yeah, well, we don't know either where the number came from, and there are so many different ways that you hear that this could raise revenue, that increased reporting increases revenue, that being able to track this and get more money through audits raises revenue. but we're not really sure which of these are which do they think are the primary ways that revenue will come in.
Sure. Ms. Dairy?
I think one of the things, again, we agree, we don't know where their numbers are coming from, and a big concern is I don't think there's been any account for how many businesses that would go under because of this, and how many entrepreneurs would be deterred because they, if they want to go into business, which it happens to be a electronic payment card heavy business, like retail, for example, high fees are a great way to push people out of entering entrepreneurship, and I'm certain that that's not been accounted for in their numbers.